They told you it could not be done. They said the barrier was unbreakable. They spoke with certainty, authority, and confidence because they had spoken this way for years. In ancient Rome, when senators declared a wall secure, the people believed them. Not because the wall was strong, but because Rome had never been wrong before. This is how power speaks before it falls, not with fear, but with certainty. For years, the financial system told the same story, that silver had a limit, that the line would hold, that control was permanent. And like Rome, they believed their own mythology. But markets do not obey promises. They do not respect titles. They do not bend to declarations written on scrolls or signed with seals. In Roman mythology, fate stood above emperors, blindfolded, unmoved. No matter how loudly leaders spoke, fate moved when the balance demanded it. The silver market reached that moment, not because someone wanted it, but because pressure became unavoidable. And when fate moves, systems break. Look at the calendar. Late December, the quietest days of the year. In Rome, this was when the forum emptied. Merchants returned home. Scribes closed their books. Guards relaxed their watch. In modern markets, it is the same. Trading desks half-staffed, risk managers absent, liquidity thin. This is when prices are usually controlled with ease. This is when suppression works best. And yet, this is when silver chose to move. One moment changes everything. A single weight placed upon a structure already under strain. Silver crossed the threshold not with noise, but with inevitability. When it did, the altar cracked. This was not a spike, not a test, not a rumor. It was confirmation, the kind that rewrites history books after the fact.
For nearly 3 years, the wall stood, reinforced, guarded, defended. Every advance was crushed. Every rally was buried. The $75 level was not just resistance, it was doctrine. But walls do not fall because they are weak. They fall because pressure never stops. And silver did not knock, it walked straight through. When a wall falls, the silence afterward is louder than the impact. Defenses once trusted are now rubble. Certainty turns to confusion. This is the most dangerous moment for those who relied on control, because the old map no longer applies. Silver had crossed into free territory. Systems are built on assumptions that behavior will repeat, that pressure can be managed, that risk models are correct. But when assumptions fail, systems do not adapt, they collapse. Silver did not expose a bad trade, it exposed a flawed structure. This week mattered because timing matters. End of year, low liquidity, high vulnerability. In Rome, census season revealed the truth of the empire. In markets, year-end reveals reality, and reality was already pressing against the limits. This period is quietly known as Ghost Week, a time when markets are thin, when pressure can be applied with little resistance. Historically, this is when prices are pushed down, but this time, the ghosts were powerless, because demand did not leave. Instead of suppression, acceleration. Instead of fear, urgency. Silver did not rise slowly, it surged. Momentum replaced control, and once momentum takes over, authority fades. While paper markets slowed, physical markets moved. Ships sailed, caravans crossed, metal flowed. The East never stopped buying, because real value does not take holidays. With guards absent and confidence misplaced, the gates were unguarded. Buyers did not hesitate,
They ran through, and once inside, the structure changed forever. This did not begin in December. It built for years. Supply deficits, industrial demand, paper leverage. Pressure does not announce itself. It accumulates until release is violent. Positions built for stability became traps. What once provided safety now inflicted damage. Those who sold protection assumed control. They assumed wrong. Risk models rely on the past, but history never repeats exactly. When silver crossed the line, logic lost authority. Math took control. This is where machines turn against their masters. Forced buying feeds higher prices. Higher prices force more buying. A loop with no emotion, only obligation. This is the gamma event, and once it begins, it does not ask permission. Price did not climb, it leapt, because there was no one left to sell. In thin markets, gaps appear, and gaps change psychology. Imagine holding a losing position as markets close. No escape, no adjustment, only time. This is not financial pressure, it is psychological warfare. Every hour increases risk. Every headline becomes a threat. When markets reopen, survival replaces strategy. This is how floors are built. While the West debated, the East paid more. Shanghai priced reality higher. Metal moved east, and prices followed. Capital flows toward value. Always has, always will. As long as the West was cheaper, demand would not stop. Vertical moves scare people. They feel unnatural. But repricing is never comfortable. Comfort belongs to stable eras. This is not one. Ignored becomes noticed. Noticed becomes desired. Desired becomes feared. This is the cycle, and silver has entered the second phase. Markets test truth. If silver holds here, the floor is set. What was once ceiling becomes foundation. This is how new eras begin. Funds do not want perfection, they want presence. Being late is better than being absent, so they buy, and their buying is heavy. Paper prices lag reality. Physical markets tell the truth first, and the truth is simple. There is not enough silver. Empires rise on hard assets. Paper fades. Those holding metal gain leverage. This is not theory, it is history. This was not hype, it was mechanics. The suppression era is ending. The repricing phase has begun. Silver did not ask permission, it moved. And those already positioned do not chase, they observe, they protect, they hold.